Firstly, thanks so much for joining us. This is essentially to celebrate one of our new products, LinkPay, something that we at Stitch are incredibly excited about just because of what this product holds, the potential that it holds for the market, right? What we're essentially doing is tokenizing users' internet banking credentials and bank accounts and enabling one-click payments for any return payments, right? I think this evening I'm really joined by a really prestigious panel and speaking around payments experience, specifically in relation to both conversion as well as retention. So I'm excited for the chat tonight. I think just giving it a little bit of context, we've seen a lot of changes from a payments perspective, especially on the African continent, and a lot of innovation that's taken place specifically in South Africa. And on the panel, I'm joined by a few individuals that are actually driving that innovation, right? So we've got Zapper doing their thing across the payment space. We've got Peach Payments, Upnup, Spoon Money that will give us a different perspective of what payments look like across the market, and then Stitch as well. I want to just introduce myself. It's Grant, as my name tag says, and I work at Stitch. I head up business development here, and I'll be moderating a panel discussion tonight for the next half an hour or so. Just prior to getting into it, would like to give the panel a round of applause. So could everyone join me?
I was about to tell. Yeah, there we go. Just consider the panel.
What I'm going to do now is just ask each of the panelists to introduce yourself. So name, role, and what your company does. Brett, we'll start with you, and then move down Nicky, Tony, Josh, and eventually Andrew.
Cool. So I'm Brett White. I'm the CEO at Zapper. I hope you know what Zapper does. So Zapper's been traditionally in the QR space, but we'd like to position ourselves as a mobile payment platform. We're B2B, B2C, B2B2C. We kind of cover all bases in terms of direct to merchant, direct to consumer, and we've got our platform where we're dealing with businesses, enabling them to kind of do the same things that we do. So we're just trying to enable mobile transactions and over multiple payment rails to try and make merchants' lives easier in terms of accepting transactions and make consumers' lives easier in terms of the options that they have in terms of making mobile transactions.
Awesome. Thank you.
I'm Nicky Swartz. I'm the founder of Spoon Money, and we don't do payments. But we do work in the space of financial inclusion. We very specifically provide a combined saving and credit solution into very low income, very informal, women-led businesses.
Awesome. Thank you, Nicky.
Nice.
Tony.
I'm Tony Mallam. I'm the MD of Upnup. Upnup is a new financial app. We've just launched it in the last week or so. It's out there at the moment in the Play Store and coming soon in Apple, typical Apple fashion. They're giving us a hard time. But we're out in beta. We are focusing on changing the savings culture in this country. So similar to you, financial inclusion. I think a lot of people have never had access to savings and investments. We want to do that, and we want to do that through the basis of micro saving and micro investing. We're kicking off our platform with Bitcoin, but we'll gradually expand that to include equities, savings, and other alternative options.
Cool. Hi, I'm Joshua Shimkin. I'm the head of SME growth and marketing at Peach Payments. We are a payment gateway. So we bundle a lot of payment methods, and we offer them to merchants so that customers can transact using cards and EFTs and QR codes and any payment method that customers want to transact in.
Hi, I'm Andrew. I wasn't trusted with a lapel mic.
He's feeling very left out.
So I'm holding this. I am the Chief Operating Officer here at Stitch, and I think Grant has already given an insight into what we do, but we sell data and payments APIs for financial technology companies, marketplaces, PSPs, anyone who transacts online.
Awesome. Thank you. So what we're going to discuss today is primarily looking at the payments experience, right? But looking at how the payments experience essentially influences or impacts both conversion as well as retention. And I think the first question, because I want to start with you, Tony, and just get a little bit of context. I mean, like we're fans of Upnup, right? And just want a little bit of context around like what you guys are working on, what you're doing at Upnup, and how you think about the payments experience in that overall user experience.
Yeah, sure. I think it's important. We're one of the first ones to be using your LinkPay, and very excited about it too. It really it came along at the right time for us because it's all about where we come into payments is literally what we do, guys, is you download the app, you register an account with us, you link your bank account. It's a crucial part, and there's got to be a lot of trust involved there, and hence, using Stitch, and we play heavily on your brand for that one. You then do your KYC, and then once a week what we do is we analyze the transactions in your account anonymously. We don't have a look at what you're spending it on. You're not going to Mavericks every day and things like that. But we pull that information through AI. We run an algorithm, and we pull a certain amount once a week from your bank account, or it's pushed as an EFT through Stitch and into our account, and we buy Bitcoin with that. And that immediately reflects on your dashboard, and instantaneously you've got a micro portion of Bitcoin. So for example, you can set it in such a way that it adds up or rounds up the transactions in your account. So we've got two options there at the moment. And you can also set a weekly cap. You can pause it at any time, and you can withdraw it at any time. So you've got a bunch of options there, and we built that app around that process. But where Stitch comes into play is that this is already, it's like you've got to give a smooth feeling to the whole thing. And the whole payment process of pulling that money from their account and buying the Bitcoin has to run seamlessly. So now every Monday morning, currently it's set, is that this run will be done, and we run our EFTs on a Monday. And then suddenly you just get a ping on your phone, and you go, oh, you just bought some more Bitcoin. And it was just like that. Boom, it happens. And that's the beauty of it. Now, that's important from a growth point of view, and it's important from a retention point of view. Because if it doesn't happen, and you don't get those Bitcoins, there's dissatisfaction. So the churn starts happening. So churn and retention to us are like the opposite ends of the spectrum.
You had mentioned previously, I think the term that you used was set and forget. Yeah.
So
Could you speak around that?
So basically what you do is when you download, register, and link, you choose your savings preferences. It's an option in the app. It's the first option that comes up. And you can decide how you want to do it, how much you want to do, how frequently you want to do it. Because at the moment we're doing it weekly, but we're going to move to daily for those that want it. And literally, once you've done all of that, the rest is passive. And that's why we say set and forget. We've got another saying is basically tip yourself every time you spend. So.
I like that. Nicky, I want to come to you because you've spoken about not being a payments company, and would love to just understand, because obviously your business is very much cash reliant, right? Working with these female entrepreneurs. And during the pandemic, it was a time where we didn't have physical cash or just physical interaction, right? So want to understand the methods that you look to employ, how you kept consistency in what the payment experience looked like from a Spoon Money perspective.
Yeah, it was challenging. I mean, I have to say that COVID almost killed us. Our clients' lives are very cash-oriented.
Yeah.
And frankly, COVID almost killed their businesses. And in fact, the informal sector has been disproportionately impacted by COVID.
Yeah.
And by virtue of that, Spoon alongside our clients. So if you want to feel with your clients,
yeah,
go to the bottom of the pyramid. But it did. What it did do was force us to go digital. Having been this incredibly, paper-based, kind of physical, kind of here's the money, literally lending people money, here's the money, going to collect it in a month's time, was kind of the way we operated. And COVID, literally, we overnight went digital. And I have to tell you, lost half our clients, not from COVID, just by going digital.
Yeah.
Right, in that space. Because our clients just aren't there. When in the world of startup land, as I call it, this phenomenon of, if I have a mobile phone, I have a business, just doesn't feel real where we play.
Yeah.
And it doesn't feel that real to our clients. We did a survey and ran a run on our database recently, and something like only 30% of our clients have WhatsApp. Does that give you a sense of how non-digital the space is? So, huge education job to be done. And I guess the awfulness of this is that it self-selects people out of financial inclusion, actually.
Yeah.
Unless people do something really radical. I guess the NGOs who have to do these really high-touch models.
Yeah.
So, but turns out there are a lot of people in the informal sector, and a lot of them, and particularly younger people, are obviously digital and do mobile. And so, yeah, we found a way to get money. Well, very important to get our money back.
What were some of the channels that you looked at that point in time?
Yeah, we looked at everything.
Yeah.
But we knew it had to be deeply convenient
Yeah.
to our clients because we don't pull money. As some of us, we say in the office, we kind of have voluntary payments back into Spoon,
Yeah.
which is amazing because we have a really low default rate. But it's true. People literally push money into us, and because we don't pull money. And because they're doing cash, we had to figure out all those mechanisms. Long story short, we have a payment gateway.
Okay.
Not ours, we use one. And that actually it's Pay At, the guys in Stellenbosch, who are in retail, which is, I think, a big deal for us because everyone has a shop right next door to them. And most of our clients trade outside a ShopRite, so that's exactly where they can kind of make their payments.
Yeah.
They deposit savings through the gateway, they deposit their loan repayments through that gateway. But also importantly, I mean, Payat now goes into a lot of the point-of-sale devices like Kazang and Flash that are very prevalent in that market.
Yeah.
And that's just, when I go and buy my electricity for $5, I can pay Spoon.
Awesome. Thank you for sharing. I think it's interesting when you look at it, and you look at it very much from an aggregator perspective, or looking at it as a payment gateway. And I want to come to you now, Josh. Just around.
I felt that coming a mile away.
just around being more a payment services provider, right? And obviously, the companies that you work with at Peach are quite diverse in the way they look, right? Across e-commerce, marketplaces, mom and pop shops. And wanted to just understand, given the shifting needs of your clients, how you actually ensure consistency in what their payment experience looks like.
Okay, so you're right. We work with the smallest startups as well as the biggest companies in South Africa. And we have to make all that work under one house, that is Peach Payments, and make that technology something that we can manage, update all day, every day, 365, right? So we cater for different experiences, but with the same principles in mind, okay? Because the needs of our enterprise clients are drastically different than the needs of the startups and the young companies. Because, and so your question was, how do we plan for that? Well, we always keep the customer in mind, right? The merchant, because we're all buyers all the time ourselves, right? So we think about, so if I'm going through this experience, what would I expect? How quick is it? Am I catering for different speeds of the network? Am I catering for different executions on mobile phone as well as desktop?
Yeah.
And that can vary between platforms, whether it's Shopify, Wix, Magento, something custom, right? We do this for all of them all day, every day. So it's complicated. And it'd be take this whole hour for me to really tell you about how we think about each one. But I think the core thing is to keep it fast, right? How do we think about catering for these experiences, right? We have to keep it fast.
Yeah.
We have to know that the business owner is going to need to do things at the end of the day with this information. So what are we providing at the end so the business owner can run their business efficiently and effectively, right? There's a lot of reconciliation and refund management and managing chargebacks. So all of that has to be done fast, every day, all day.
Yeah.
I would not have woken up and wanted to take on that challenge as a business owner. So I did not start this business, but I'm super happy to learn how we do this because it is overwhelming. I mean, it's overwhelming how often we're on all the time, or else you're not.
I think it's interesting as well, and Brett, I'll come to you in a moment. I see you itching to go here, but I want to stay. I want to stay on that side. Andrew, just pulling you into this one. So really how Stitch is positioned is as an infrastructural player, right? So similarly, how does Stitch think about, and in your opinion, like how do you look at that consistency covering how the product is consumed, right? Because it's very much a B to B to C. So how do you keep consistency, or how do you think about consistency in that payment experience from an end user perspective?
Yeah, that's a good question. I think when people often think about consistency in payments, they often think about branding, right? I think particularly in the EFT or account-to-account payment space, there are a lot of other players that have already existed in the ecosystem that are very heavily consumer-facing or consumer-centrically branded, right? And I don't think that has necessarily been the approach that Stitch has taken to conversion or Stitch has taken to uniformity in the payments experience. One of the things that I think is like super cool about what we do and about like today specifically is just like take a look around, right? Everyone here is like from a super different space, from a crypto company. Like when could you find like a crypto company and like a bank in the same room, right? Like very, very frequently. And there are also like marketplaces and payment QR players, right? I think like the fact that we're able to serve everyone with the same core infrastructural components that just fundamentally at the core like work, I think is like enough to convince consumers to trust and use those payment methods, right? And I think like having a completely new approach to account or bank transfer payments has been Stitch's MO since the beginning of our launch. And I think like that doesn't rely upon consistency. It doesn't rely upon branding. I think it all relies upon having just a good experience and, you know, a B2B, right, proposition, such as like an investment application or a payment gateway for people to really trust and put their money in. So, I mean, we work a lot with every one of you. I think like, you know, part of the best part of my days are just like speaking with entrepreneurs to be able to craft these payment experiences with you. And they're not consistent, right? But that's kind of the beauty of it.
Awesome, thanks. I thought the best part of your day was our 8 o'clock meeting, but so I want to come to you now, Brett, because I think given the payment space, like, you've been at Zapper now for the past 7 years, right? And you've seen shifts in consumer demands and shifts in consumer trends. And what for you has been like the most notable shift? And how do you at Zapper actually make provisions for these shifts and trends in how you present your product?
Look, it's come a long way since those early days. You know, there was a lot of people that didn't know what a QR code was, and they were very
A lot of education.
There's a lot of education. I mean, look at like the collateral that we have in the stock room of like what we used to put out there, like explaining every last detail.
Yeah.
This is a QR code, this is a mobile phone, this is how you load your card. This, you know, like you'd have to walk them through every single step of the way. And now it's a lot easier. I think consumers are used to that kind of stuff. So, yeah, look, at the end of the day, it's just about trying to provide a frictionless journey for the consumers. I mean, the biggest issue nowadays is just the confusion in the market around the number of, you know, the proliferation of options in the market.
Yeah.
And trying to, you know, and brand plays into that in terms of like providing enough comfort for the consumer that they trust the entity that they're paying and how they're paying and the application that they're using. You know, that's the primary kind of concern at this point in time, is just to make sure that the consumers feel a level of trust with the entity that they're interacting with.
Yeah, I think that's such an important piece, like the trust, but the trust in the entity that you're paying to. Speaking around, because I think you mentioned aggregation, and Josh, I want to pull you in again here because we had discussed how Peach essentially is looking to aggregate payment methods on platform, right? So how do you think about that aggregation with regards to options that you're presenting to clients, and the cleanliness of how it looks, not actually overwhelming a consumer? Would love to get your thoughts and perspective on that.
So it can be a little overwhelming. I grant you that. We can all think of storefronts in South Africa that provide not just every payment method from in terms of like money out of your account, but points systems, right? How many point systems and reward systems can you use to go pay for things? It gets very overwhelming. I think one thing we do is we provide the control to the business owner, right? So it's your choice as to what payment methods you show.
Yeah.
We are just one technical integration that gives you all these options at once. So that's the value proposition right there, so that you don't have to do 2, 4, 10, 12 different technical integrations, right? That is why we exist. We always say we don't choose. It is not for us to decide what the business owner should use, right? It's our job to make it easier for them to
Yeah.
choose the things that they want. So, okay, here's a great example. How many people used a buy now, pay later option a year ago? How many used one in the last 12 months? Nobody's using buy now, pay later. Okay.
Can we get a
fantastic
show of hands?
audience.
Can we get a show of hands from the
Everybody's paying
audience,
for everything
please?
immediately. Great audience.
There's
I've
no
got
one-
some phones to sell you right now.
This is a
But
quick
I
survey.
think you get my point, that like we've all seen the rise of buy now, pay later. In fact, if you read any of the startup literature,
Yeah.
right, I mean, they're getting funded incredibly across the continent, amazingly, right? And so we see that, right? We see those trends, and so we're the first people to call up somebody who is showing that they're providing something unique for business owners and for consumers, and say, how do we integrate? Let's do that, you know? And so that, we're doing that all day, every day. Yeah.
I think that's interesting when you look at it from an experiential perspective. And Tony, bringing you back in here, I think that the user experience that you actually offer through the Upnup app is like really, really closely coupled with the payment experience, right? So how do you think about that that payment experience with regards to retention, and what are the implications if a user has a poor payment experience on your platform?
So, I mean, the key thing for us is retention, because we're going to grow our user base. We're right at the bottom of the curve now. We've just launched. So it's crucial. Every single customer is crucial. And honestly, if there's a rough payment experience, it's going to affect the retention. It's going to put people off, and it's just going to create a bad vibe, and we certainly don't want that. So it's absolutely crucial that we get a smooth, seamless. I mean, like I said just now, if it happens,
Yeah.
and I find out afterwards that I've made a payment, fantastic. That's the way I prefer it. You know, this is something that I've authorized, I've pre-authorized, but I don't want to be getting back in there and having to reauthorize and do those type of things, because that becomes irritating.
Yeah.
And then I'm going to say, oh, this is a pain. I'm not going to do this anymore.
So I think in speaking around that reauthorization, and we've also spoken about trust as a theme. Brett, I want to come back to you because, again, been in the payment space now for the past 7 years or so, and you've also seen like this evolving consumer trend. How have you observed end user trust, and then how have you then again made provisions from a product perspective to actually speak to this?
Look, we do a lot in terms of trying to engender as much trust as possible through the application. I mean, as a payment facilitator, we've kind of got our own risk engine in the background. So we try and make sure that we provide the most frictionless payment journey for our customers as possible. You know, like in the card space, being a card not present processor in that area, we kind of, you know, 3DS is a necessary evil in certain circumstances, but you don't want to use it if you don't have to.
Yeah.
So we try and provide our customers the most frictionless journey that we possibly can. So, you know, the friction and when it does come up, when a customer is not expecting it, trust me, we hear about it. You know, that no one enjoys a bit of friction in a transaction when they don't believe that it's necessary.
Yeah.
So, you know, you've got to balance that very carefully. You know, we balance the friction in our consumer onboarding when they're registering. We balance the friction from a merchant perspective when they're onboarding. We balance friction. I didn't mention it earlier, but we know we do loyalty and vouchering as well.
Yeah.
And you want to make sure that if someone's going to earn anything off of a transaction, that it happens seamlessly. If there's an item in my basket that I'm paying for, give me the points. I don't have to tell you that I want to earn points for the item. And I don't have to do anything other than just scanning and paying to get my points for that. If there's a discount on an item in the basket and it recognizes that, have that discount come off of my payment automatically, or at least feature that prominently on my payment screen so that comes off. So friction is a massive component of it. As soon as you introduce any kind of friction in the payment journey, and the e-commerce experts will tell you that, you know, you introduce a lot of drop-off, which obviously can affect your bottom line seriously, and also affect your customer retention. You know, we've had people that have been on our platform for a very long time where they experience a 3DS experience where they don't anticipate or expect it or haven't had it in the past. And trust me, we hear about it and you get, you know, that like we never want to use the platform again. If you want to retain customers, we all used to using, you know, international platforms, be it social media or whatever. Those user experiences are incredibly slick And it's important to keep the journey for a customer as easy as possible.
Yeah. So speaking around end user trust, because I think what would be a very interesting perspective is yours, Nicky, and speaking around more in the informal markets, what that end user trust looked like, right? Especially when you made these transitions during the pandemic. What were you doing? What was the messaging? Like what did it look like when it was good? What did it look like when it was bad? If you could just give us a sense of that.
Yeah, no, it's a really interesting one because people who have a little money are deeply skeptical about people wanting their money,
Yeah.
right?
Yeah.
And Spoon's model is savings first. So actually, we force you to save with Spoon before we give you a loan.
Yes.
And imagine that as a friction point. So I think, those are horrible, hard, ugly years of sitting in townships literally all day, every day, stood us in good stead because that's where we built the trust. And when we went digital, people kind of knew Spoon. They knew we could still give Spoon our money. But specifically around payments is quite an interesting one because the first, when we introduced it with Payout, it was through retailers and retailers exclusively. And then we kind of brought on...
Sorry,
Yeah.
I just want to
Yeah.
stop at that point. But
Yeah.
when you introduced it with Payout and retailers specifically, so people could go to like a money market at a shop, right?
It's
give their
actually not the
funds-
money markets, it's actually the till.
Okay.
So when you're doing your thing, you go and it's a bill payment. I mean, they're a bill aggregator kind of
Gotcha.
platform to all intents and purposes. So you go to a till, you've got a Spoon number that's yours, and it's your unique reference number to Spoon. You go and you tell the titter, I want to give Spoon $150, and it arrives.
Yeah.
And the truth is, we have traded on like the likes of a ShopRite to give Spoon that level of credibility and security and safety.
Your partners.
Exactly. They're not our, Payat's the partner, but they know ShopRite, right?
Yeah.
People trust ShopRite.
Yeah.
So we would kind of leverage that.
Yeah.
And for what it's worth, and the interesting thing was when we tried to introduce, which we thought was infinitely more convenient, payments through the likes of Kazang and Flash. So every Spaza shop has a Kazang or a Flash point of sale device.
Yeah.
And the level of resistance to that was quite extreme. I mean, people were like, Nicky, don't. You'll never get your money back from them.
Yeah. Yeah.
So the distrust for the guy who's literally your neighbor, and where you go and buy your airtime and your electricity there all day, every day, and yet it was a hard sell.
Yeah.
And in fact, they remain probably the lowest proportion of our payments go through Kazang and Flash. It's quite interesting. So the big retailers,
Yeah.
Pep. I mean, this is where brands count,
Yeah,
right?
of course.
This is the stuff we trust.
Yeah,
And
it's so interesting though to look at trust as like, trust in relation to like conversion and retention across so many levels
Yeah.
of the space. And Andrew, to bring you in here as well, just to speak a little bit around trust, how you think about like trust in the process. Because what you're essentially doing at Stitch is also asking people for their internet banking credentials, right? And that could be a sensitive piece of information. Would love to get your thoughts and opinion on that.
Yeah, I think there are two layers of trust that are worth talking about. The first one, which you're mentioning, like consumer trust, we actually place a lot of the responsibility of getting consumer trust in the merchants that we work with, right? Like, if you're a Peach or if you're a Zapper, there's clearly like a legitimate brand, right, behind which you are being asked to link a payment method
Yeah.
or link a bank account. And I know that like Thea or Grant or Dioval, one of our team members has briefed you on how to do so and the UI UX education that you need to give the customer in order to be able to get them to do so effectively. I think like the trade-off that we haven't really fully spoken about today is actually merchant trust of customers, right, in terms of fraud, right? And I think like one of the biggest trade-offs in payments that merchants and businesses that transact online make today is introducing friction to be able to mitigate against merchant to consumer trust, right? And I think traditionally, like in a card-dominated world, whereby like a stolen credit card or card not present rates were like quite high because 5%, 10% of transactions would fail due to stolen payments or fraudulent payments. I think one of the things that we're really excited about working on is by like breaking that trade-off entirely. Like you do not have to sacrifice security for conversion and vice versa, right?
Yeah.
And I think like a lot of the reason why there are payment failures today is because merchants are risk averse to taking on fraudulent card payments. And I think that's something that we haven't really fully explored as like an industry, how to mitigate fraud while also increasing like flow through for customers.
That's an interesting point. I want to come back to the fraud shortly, but I actually want to speak around retention and come to you on this one, Josh. So looking at the consumption of Peach, right? It's B to B to C. How do you think about end user retention, and how do you make provisions for this, and how you actually architect your product as well as that user experience?
Andrew spoke really eloquently about that. I'll say, I mean, I think I think the brand really does speak volumes.
Yeah.
Listen, there are a lot of technical things you can do. You can do bin management, and you can make sure that the bins of the banks are accessible to the type of transaction type you have at the merchant store, right? I know I'm speaking a little technically here, but
yeah.
But there are a lot of these little technical things that when banks issue cards, you have certain rights to those cards as the user of that card. And card to card could have completely different accessibility online. So there are a lot of banks that restrict certain cards to do only certain types of transactions. Well, we know that. So we can tell a store now when it comes to retaining subscribers on a product, you're going to have to think about if your product is a product that would cater to a certain group of individuals that bank in certain places or have a certain type of payment method that they prefer.
Yeah.
You have to think about your retention of people on that payment method, because that payment method may not work really well for subscription-based products. And that sounds like, how could that be possible, right? A credit card, like I subscribe to stuff all the time. Well, that is why this business is hard.
Yeah.
That is why working with people who've been down the road and have seen all the possible permutations of what can happen for your business model using payment methods in certain countries, and we operate in South Africa, Mauritius, and Kenya now, so it triples the complexity. That's just like one example of many, and I think subscriptions specifically speak to that because there are a lot of hidden potholes when you walk down that road around tokenization, communicating the value of saving a card on a storefront, and what does your customer need to know to be able to feel trusted that you're going to store the card the right way and manage that, and then you're also going to be able to make that transaction every month or every quarter, every year.
Yeah. There was a great thread that you mentioned, and it was like retention in a method, right? And Brent, I'm going to come to you on this one because the use of Zapper can be quite habitual, right? Mm-hmm. You really have to get in the rhythm of when you see the QR code, you scan it. I see you guys have also recently launched Tap to Pay. Yep. But how do you then think about that habitual flow with regards to retention for these end users?
Yeah, look, I think the habit, and I don't want to oversell this, is that once a consumer has experienced a payment that has reduced or removed friction from a journey, paying the QR code on the receipt at a restaurant, or paying the barcode or the QR code on a parking ticket, or paying the barcode or QR code on an online bill, or scanning a QR code on an e-commerce checkout instead of entering my card details into the form where I'm, a little bit risk averse and not really comfortable. Do I trust the site? Don't I trust the site?
Yeah.
That definitely engenders retention. Once a consumer has tried it and experienced that frictionless, safe, secure transaction journey, it does engender a lot of trust in terms of them coming back and utilizing it again. Then really the trick lies in just making sure that it's ubiquitously available in as many places as possible. So for whatever site I go to, hopefully Zapper is represented there. So you kind of want to make sure that you're available everywhere, and then that trust, like I said, once a consumer has tried it and they trust it, the stickiness is there.
Yeah.
You see, with the tap to pay thing, what we're providing there, just to touch on that, is as I alluded to earlier, our intention is, we're primarily QR codes, but behind our QR codes is a URL. So in certain situations, you want to be able to share that URL with somebody who's not sitting in front of you if you want to accept the payment. So I can share a URL with somebody overseas or with someone in, anywhere really, and they can make a payment to me via the Zapper platform so I can accept the transaction. Now, what we're doing with the tap-to-pay solution is providing, any merchant really. You can be a street vendor to an electrician, a plumber, or whatever that's coming around to your house, a delivery man, and they can take a transaction easily off of the Android phone through the trusted platform and brand of Zapper without needing additional peripheral equipment. But it's still a mobile transaction at the end of the day. For us, it's not about being QR specific or URL specific. It's about taking an element of friction out of a payment journey for both the consumer and the merchant.
Awesome.
Sorry, maybe to plug in here. I think unless you're a pure play payments player, which is like Zapper, Peach, and even to some extent like Stitch, payments really isn't kind of a retention factor. The lack of payments is a retention risk, right? Your customers in your ecosystem, if you're in fintech, aren't going to stay around because you have good payments. Generally, unless you're just a payments application and you present that merchant acceptance, merchant ubiquity. People are in your ecosystem because they want that savings product, or they want that crypto product, or they want money transfer capabilities. The payments existing only power and enable the financial product that's on the platform. And so that's why I think working with players like yourselves in the room is quite interesting for us, right? We get to see all the ways in which people are using payments to be able to create financial products, but generally I don't think that payments itself is a retention stickiness factor. It's actually for your ecosystems, not having good payments is a churn risk. Right?
Yeah. I think, go for it, yeah. There's lively debate. We're going to keep this going. Yeah.
It's just that, to the Peach example earlier, you've got this myriad of options on the website, right, to check out, is that customers will have a preference. So we'll introduce a payment method into our world, not because necessarily it's something that we would use or that we would prefer to use, but customers out there like to use it. So if they trust that payment instrument, it makes sense for the parties to make that available to the customer to check out and give them a level of comfort in that checkout experience. So while I appreciate it's like Uber, you don't think of Uber as a payments platform, but there is one. You're ordering a car and a payment happens automatically in the background, but the reality is you're using that platform to get from A to B. But there's a payment that happens in the background, and that trust, that seamlessness of it, a customer will become accustomed to that based on whichever payment type they prefer.
I think just prior to moving into audience Q&A, Josh, I'd love to pull you in to get your opinion and perspective on this one, on this point specifically.
Okay.
How do you think about payments, as Andrew and Brett have just been debating, with regards to retention?
I gotta think here. Okay. Yes. We are at Peach are always gonna. I can't agree more with what Brett said. We're always gonna say more is better, right? And we want to put that control in the hands of the business owner and say, what do you want to offer? Because we got it. And because far be it from us to know their business better. We know payments better, and that's why you work with us.
Yeah.
But we don't know their customers better. We work with every industry, every type of business model, all day, every day, from the biggest businesses in South Africa to the very smallest, right? And we pride ourselves on being able to do that. So we also can't overthink it, right? And as we see things become popular, we want to take it on because we see that there's somebody's figured something out, right? And we want to be able to offer that to our merchants. And that to us is retention. It's giving the tools to the business owner to do the work that they love.
It also really speaks to your agility to demand as well, which I really like. Okay, thanks very much. We're going to open up the floor to questions now. So this will be an audience Q&A. So if we have any questions from the audience, we can grab those. Cool. I'm going to run over and give you the mic.
I wanted to ask Tony, so you mentioned you have a saving product and the underlying investment tool is Bitcoin.
Initially, yeah.
Initially. Do you underwrite it? Because obviously the price fluctuates significantly. So in terms of user retention, I mean, if it goes down or your user's going to stay with you, obviously can't, if it goes
Sure.
up.
Yeah, no.
Yes,
Understandably, you're dealing with one of the most volatile investment assets classes of all time. So, yeah, I think it's an education process. No, there's no underwriting. You know, if there's a loss, there's a loss. We have to make that very clear. The fact that we're dealing in micro amounts initially, there's an element of time for people to appreciate what's, you know, where the ride goes. It's quite a wild ride. But the thing about crypto investing is, you know, you can't time the market. It is a very volatile product. So the more frequently you buy, hopefully you can ride the ups and downs. And that's the philosophy of what we're doing, is moving from weekly payments to daily payments. For those that are essentially, and crypto is not the start and the end of what we do. We really have to look at other asset classes as well. But it's an evolution process in terms of ourselves and where we are. And we just felt there was a certain hype around it right now. As we speak today, it's taking a bit of a pounding. And, you know, those alpha testers with us, Ian's one of them, you know, they've bought it. I mean, crypto was like 600,000 Rand. Bitcoin, and it's sitting down at 500,000. So, boom, it's going to happen. But yeah, no, we don't underwrite.
Tony, to just add to that, I think Ricky...
You guys realize you're talking to the oldest guy in the room here about
Ricky shared some really interesting statistics on market performance covering like the JSE, the S&P 500, NASDAQ, and then Bitcoin.
Yeah.
Could you speak to that a little bit?
I could speak to it, but I just want to put a disclaimer on it. This is not advice. Okay? You know, the typical disclaimer. Yeah. We're not advisors. We're not financial advisors. There is a lot of risk involved, and you've got to look at it from perspective. 2014 to today, Bitcoin's performance, if you put money into Bitcoin in 2014, you would have gained 29,300%. That's Ricky's number that he put on the table.
That's insane.
It is insane, but you know, if you start today, where's it going to be in 8 years' time? We don't know. I mean, it could be more than that, it could be less than that, it could be down. So this is the thing, it is risky. But against that, I think S&P, again, Ricky's figures, was about 154%, 500, and then the JSE top 40 was about 70% over the same period. So, you know, what the message is there is, guys, if you know, don't put the house on it, but get in the race, put something in it. And, you know, who knows where it's going. But it's a bit of a very, very volatile asset class. So, yeah.
Awesome. Thank you.
No, it's essentially we will put a stable coin in there. We had to pick one. So we picked the flavor of the month at the moment, and that could be debated as well. You know, there's quite a few others riding different horses here. The idea is we're working through on the Valor exchange, so we can bring most of their tokens on board. But just in terms of our beta product, we wanted to start with Bitcoin.
Awesome.
A question for Josh. So, you know, with payments and with each option that you offer a client, there's probably an endless amount of permutations there, but there's an implicit expectation from the client that your option is best in class. So how do you almost guarantee that consistency in each option? And as you scale and as you grow and as you add a new one.
Okay. So I'll caveat what I said before, because you're absolutely right, that there needs to be a certain amount of traction, right? There needs to be a certain amount of history before we're going to start to integrate a payment method. And it's for the same reason we've all been talking about trust and payments, and why would one of Nicky's I want to say customers, clients, pay at the till, the ShopRite till instead of the flash till? It's exactly the same payment. They would do the exactly same thing, right? Well, she explained a really great user experience where the trust is just there more. So we will go through that same process. Of course, there are a number of technical things we always have to think about. PCI compliance. Oh, I'm going to make everyone really bored right now with lots of technical jargon. But yeah, I mean, there's a whole laundry list that 4 people in this room could go through for you about all the different things we need to make sure, to your point, that it's worthy, right, of putting out to South Africans and Kenyans and Mauritians that they should be using it. So yes, we should not be so. I mean, I don't want to be cavalier about saying, "Hey, any payment method, any time." Right? Absolutely, there's a threshold. But I'll say it's getting easier. I mean, I think because, look at this room. Look how many people are working in payments and fintech. The banks and SARB are all figuring these things out better. So it's never been easier to start a payment method, too. But at the same time, yeah, I mean, there are certainly standards you got to live up to.
Okay, this is for Nicky. Just in terms of the market that you're serving, what platform are you using for your consumers to access their account with you? For example, is it a web-based solution? Is it a USSD solution?
SMS and WhatsApp are the name of the game. Yeah, we literally are just thinking about USSD and went into research just last week with our clients to understand if they'll use it. But right now, it's a push to clients. You want to know when you must pay us and how much you have in your savings. And so we push that information to clients.
Via WhatsApp predominantly?
Correct. Yeah.
Awesome.
But only 30% have
Have
WhatsApp.
WhatsApp.
How do you get your head around that?
Welcome to my world.
Yeah. I'm just piecing this together. That is a huge challenge. If that's what you're relying on, but only 30% of your...
Yeah.
Yeah. Yeah. Okay. I'm walking your journey with you right now.
Feeling the pain.
Yeah.
Okay, we're going to come to our journey here.
Hi, yeah. So, I mean, I don't ask this question like in any way that implies that there's no reason to do so. Because obviously people do use it a lot. Like we've seen that in the market, and people use it. And people use it on our platform too. This kind of instant online EFT kind of product. But I'm just curious, maybe we just haven't done enough user research, but why do people actually use that as opposed to a credit card? Like, what is the typical reason why?
Yeah, I can start off. I think that there's obviously a lot of user adoption as well as trust and confidence in the payment method that has to take place. But in some of the preliminary studies we did, I think generally for users, it's easy to remember like a username password combination than it is to remember a 16-digit card number. If you think about it, right, like a card number is actually a quite complex piece of information for people to retain, unless your browser's remembering it, unless your mobile phone's remembering it. It's like far easier to actually remember your internet banking credentials. And those credentials are probably, obviously this is unsafe, but like they're usually the same as, your email, right? Or your like school account, or your work account, or whatever. So I think like, one of it is just convenience, right? But generally, I think that the consumer side of incentivization isn't really there besides that element. I would say that in markets whereby online EFTs or bank transfers are actually more adopted, it's because merchants have incentivized the adoption of the payment method. How do they do this? Well, like I think in the UK, there are businesses that were incentivizing payment methods by essentially kicking back a %, right? Because bank transfers are far less costly than card transfers to convert. Another business tried to actually like plant trees for every single person that would like check out using bank transfers online. They plant a tree in the ground. So I think like it's a combination between giving consumers that convenience that's better than card when you kind of scope out and think about it. Like payments are quite habitualized, but like obviously bank transfers are in some ways easier than card numbers to use. And then obviously on the merchant side of things, creating that ubiquity and the pull in the market for consumers to like want to pay because they get rewards or benefits or faster settlement or et cetera for doing so. So it's like two-dimensional, I think.
Brett, I want to come to you. I saw a lot of head nods, agreeing, some head shakes.
I've got to be more cognizant of what I do. I'm quite animated. So I was listening to it, and I think it's more on the merchant end. And in my opinion, I think that if it's merchant driven, there's a lot of benefit to it, right? So card is expensive. All of these other payment rails that are being introduced around the world, whether it's crypto, etc., is because people are rebelling essentially against the infrastructure that's already in place because of the costs associated with it, especially when you consider things like cross-border remittances, etc. So it's incredibly expensive. So I think that, and there's obviously talk in South Africa about bringing out this RPP, which is kind of our flavor of open banking, for example. Note that there's no interchange yet been announced as far as what that's going to cost to actually use when it eventually happens. But introducing a thing like this, and to Andrew's point, it's around incentivizing the consumer to behave in that way so that it benefits the merchant. So like right now, one of my pet peeves as a merchant is this whole card present versus card not present, debit card versus credit card. At the end of the day, you're providing a token of identity in order to facilitate a transaction. Why does the merchant pay the penalty of the cost of that transaction based on the consumer's decision? Whether they decide to use their debit card, their credit card, whether they're paying online or in store. They don't understand the nuance behind that, but the merchant pays the penalty for that. So the reality is that by introducing a payment method that is frictionless, there's a single click, as you guys are talking about, is very Amazon-esque. Just throwing it out there. I know that patent has fallen by the wayside, so you're safe. So the point is that if you can incentivize a consumer to behave in a particular way, give them something back. So for a payment method to be successful in any environment, you've got to take the friction away, and you've got to ideally give something back. If you can make it easy, you're winning. If you can give something back to the consumer, you've really won. So if you can get those two things right, and because of the lower cost of this transaction, retailers will easily be able to find the margin in order to incentivize a consumer to behave that way. So I think that there's definitely a lot of scope for adoption of something like this. Right now, to Andrew's point, yes, I'm a bit concerned with your example of like username and password. If you're using the same password for multiple services, guys, from experience, don't do it.
Don't do that. Don't do that.
So, but I'm just saying, there's the 16-digit, yes, but I think you got to be. I think that if there's an incentive back to the consumer, the market will definitely pick this up very quickly.
Just the reverse of that. There's an incentive for people to use their cards for loyalty schemes as well. I don't know if you get the same thing if you're running it as an EFT.
Yeah.
Discovery, for example, we picked that up in a previous iteration. People don't want to move away from a Discovery because then they don't get their points and they don't get their
There's a perverse incentive there. So basically, like the merchant gets penalized. I'm saying that loosely. Because the argument is there that there's an insurance component to using your credit card. So if I use my credit card or someone fraudulently uses my credit card, at least I got the option of a chargeback, etc. But the reality is that if I use my credit card, I'm getting more points for doing that as a consumer. So I'm like, hey, I'm going to use my credit card. Yeah. That poor merchant is saying, okay, cool, thank you, I'm taking your transaction, but I'm paying more for that transaction. So there's like a double dip on, I'm sorry, there's any banks represented here, but like, I think that the whole model is wrong. And I know that look, the SARB are relooking interchanges, etc. But that whole model is flawed. So I think that the market is primed for a solution like this so that you can actually process transactions in a more consistent way, frictionless way that is lower cost and provides enough margin to give benefit back to the consumer.
So I have a question to you payments guys. I mean, what's to stop the cards just lowering that rate? I mean, they're so enormous. They're so enormous.
Entrenched.
I know, but
Greed.
the 5%'s been like the 5%, nothing like a cartel, like,
Oh, you threw it out there. Oh, wow.
But they've never had competition in the way that they have competition now. So let's just, and what they have to do is make it palatable to the merchants. I mean, that's it. That's the route to everyone's cash, right? Everyone's business is the merchant. So why not just give some money back to the merchant?
Sounds simple, huh?
Yeah. Is Visa in the room?
I don't know. I can hear Peter saying it's not that simple, and I think that's right. There's a lot of reasons why interchange rates are the way they are. It's actually very jurisdictionally determined. A combination of depending on what your local central bank acquires at, as well as the cost of the technology to be able to process in country, as well as a number of set of rules around the card scheme and fraud rates and industry rates, right? Essentially, a card, because of its exposure to possibilities of fraud, ability to get stolen, ability to get compromised, is essentially its rates vary depending on the cost of processing in country, depending on the underlying risk factors of that country. So it's not very easily changeable, and card networks are super slow to respond to insertion. So I think it's the combination of, many people haven't tried. Card networks are super dominant. It's the world's biggest oligopoly, right? And it's difficult for other people to come up against them, and that's kind of what we're doing.
Thanks. And Nicky, just you, firstly, well done on the project. I think you're doing a lot of good. You mentioned you interact with your customers through USD and WhatsApp, and typically your money in, someone wants to save, goes to ShopRite and gives cash through the pay integration. I would imagine there's a bit of a play where you'd want an employer to say, well, I'll pay you 1,000 Rand a week wages, but I'll also add 100 Rand to your Spoon account or whatever. Is there a way for that employer to get money in, or is it a case of having to pay 1,100 Rand and hoping the person goes to ShopRite or going to ShopRite themselves? Is there a way I can log onto my computer, an app, or do it on their behalf?
That's very cool. I'll think about it. But right now we don't. So. But I'll chat to Kandua and see if we can get their guys to put $100 a month into their into Spoon saving. Right?
I've got a question for Tony. So speaking about trust, how do you build trust and I guess also education for your users in a space that feels so new and also so volatile?
Justin? Yeah, so we got to do some serious brand marketing. We've got to build our own reputation. We're new on the market. We have to rely on our partners as well. So we do talk a lot to our in our collateral. We reference Stitch quite a lot. We will reference Ukesh, for example, who are one of our other partners, and so it goes. But you have to spend a lot of money on brand building. And completely, we're playing with other people's money. You've got to really start pushing it hard. So it's one of the biggest challenges we think we face.
Awesome. So that's it for the panel discussion.